Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your hosts Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day. Good morning, traders and investors. Welcome to this Wednesday, March 8th edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we're going to talk about, probably start off with that Vault 7 news from yesterday, the big WikiLeaks leak from with CIA data or reports on the implications of that. We also have a couple movers. Well, there's always movers to discuss. We have Children's Place, Bob Evans, Expedia, Urban Outfitters, a double upgrade this morning from Skyworks Solutions. Our guest today will be at 8:15. That's Blaine Reinkensmeyer. He's the managing partner of stockbrokers.com, forexbrokers.com, and stocktrader.com. He just finished his annual review of all the brokerages, and we're gonna ask him about that and the sort of the state of the brokerage industry. We know we've got some price wars happening between TD Ameritrade and Schwab and TradeStation, and with all their commissions. We're going to talk to him about that entire space when he's on the show. But first, we've got to get to the S&Ps, and that is Joel, who will tell us how we're doing.
A little bit of fall through to the downside here from the week close. 59.50 is your pre-market low. Couple points above your 7-day low. Got a rebound now, folks. Up $1, 67.50. Daily pivot at 69 even. Not much until you get into the middle 23.70 handle, 23.75.50 yesterday's high. Crude down 57 cents here at 57.57. Just really is taking a backseat to the equities and some of the other markets here. Still a major trading range, kind of bearing down on some support here as we look at the crude oil market. Gold down 380, just a slow drift here back towards 1200. A couple big down days. Let's see what happens. We did have a daily low back in mid-February at 1200. Good morning, Dennis, to you. How are the markets today? Kind of quiet.
Buy the dippers win again, Joel. Those buy the dippers, man, they make money. Because we were down last night. We got down how many handles did we get down?
They had us down at 59.50. That was down 7 handles from the close.
And buy the dip wins again. We're all the way back here. I don't even know why the dip last night. I was looking. Actually, it was after the close. We kind of had a weak close like you were talking about. And then we had some fall through and just slow leak there overnight. And obviously we've come all the way back now, though. So buy the dip.
Yeah, you had to be up at night. Well, it really wasn't at night here. I'm going to try and look to see when that dip was. I think was it around 6, 7 o'clock that we had that?
Yeah,
so,
it was earlier. It was still when the stocks were open. So, yeah.
So you can't blame Europe, right? Because Europe wasn't open yet. No, just a little.
I don't know if you can blame anybody now because we got it all back anyways. So nobody's at fault. All the buy the dippers win again.
Can I just throw one possible scenario in there? And it's the rollover in the contracts. We are trading the March right now in the S&P futures. Well, this is the second Wednesday of the month, right? So usually they roll. So I think, I'm going to have to double check, but I think we're going to be trading the June tomorrow here. A little bit more volume coming into the June contract. And during that rollover, old, funds, traders that are long, let's say long-term, the March contract have to roll out if they want to stay long. So that puts selling pressure on the March contract if they have to roll into the June. So it's a little bit of a rollover. Sometimes you see some air pockets in the market. Maybe it's just spreading liquidity around a little bit for the reason for that quick drop in the rebound.
Let's jump in. Actually, we're going to go to WikiLeaks, Spencer. What was said here overnight?
Well, it was yesterday. WikiLeaks came. I'm sure you heard about it. Everyone knew it was the top story of the day. WikiLeaks came out with another information dump. Essentially, the first part of their information dump, they called it Vault 7. It's part 1 of what they said will be more information dumps. So everyone is still kind of parsing through what was leaked here. Apple and Google got mentions in yesterday's documents, but the biggest, I think, near-term implication is Samsung. It came out that basically nothing is safe from hacking, right? So the government was using a program to hack into Samsung's smart TV, right, and use the TV's camera and microphone, even when the TV is turned off, to spy on you. And maybe the worst part, the damning part, is that the government knew about loopholes such as this, and they didn't tell anybody because they wanted to obviously keep using it. So Samsung smart TV, very vulnerable. We also learned that WhatsApp, which is owned by Facebook, is vulnerable as well. And so I think the biggest takeaway from yesterday's leaks is that we can't trust a company when they say, your data is safe. And we saw this happen with Snapchat. A few years ago when Snapchat came out, the whole thing was, oh yeah, your pictures are deleted after 10 seconds. But I think everyone knew, or some people knew, that your pictures aren't actually deleted; they're stored in a server somewhere. And that came out a year or two later, right? Of course, your pictures don't actually leave the Snapchat servers. Once they're there, they're there. They may not be visible, but they live somewhere forever. But when Facebook buys up a WhatsApp, partly because their messages are encrypted, and that's what makes WhatsApp popular, is that their messaging is safe. And now we're learning yesterday that that's not necessarily the case, because the government was able to exploit loopholes within the iPhone and within Google's phones to get basically see the message as it was being typed into the WhatsApp app. So you're vulnerable that way. So basically nothing is safe. So I would say the implication there right now, short term, where I'm watching Samsung. Long term, I'm watching Apple and Google to see what they say. They said yesterday, they released a statement saying they're obviously committed to security and blah 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 blah. But this will be a story to watch going forward.
So basically, the government is just watching us all the time.
Yes. Well, the thing that has people mad is that the government knew about loopholes. Obviously, they were using them, and they didn't tell Apple, and they didn't tell Samsung, and they didn't tell Google, because they wanted to keep using these loopholes. Which, of course, if we can use it, so can.
Is this news? Is this really news? I mean, everybody knows this. This is like they were just rehashing old stuff there. I mean, if you're doing something wrong, then you got something to worry about. If you're not, then to me, this really isn't news.
I agree with that. I agree with that sentiment.
I mean, I got my new iPhone. Apple knows. I don't even know how Apple knew I had a job. It told me where I was going to work. It does all these things. I mean, Dennis, you showed me some things when we were on the plane with an app that you have. I mean, this is just not surprising to me at all. I mean, it's news, but it's just not news to me.
Yeah, I agree with that. I would just say, if you're going to do something, if you're going to make a decision based on security, think twice. Because if you're going to, whether buy a stock or a company because they're secure and they're encrypted, or you're going to, I think twice, because that's not probably not true. There are ways around most things, or everything, as we're learning slowly. But so Samsung is the one that got hit hard yesterday. Is the one that people are most upset about, but
they got other problems.
Yes,
yeah, they got major problems.
It remains to be seen what the true implications are for Apple and Google, and then of course the whole cybersecurity sector, which we know.
Well, and Apple is trading down here in the pre-market. I'm not sure if it's from that, but with the S&P's trading higher here, usually Apple follows suit. And Apple has had a lot of relative strength here. So interesting. We're down 55 cents here on Apple this morning. So maybe a few people, hitting Apple on this news. Joel, give us a breakdown here on the Apple technicals, because you were talking about this, the consolidation that's had the last 4 days.
Incredible consolidation here, and I got a setup here, one of my favorite setups here. You crossed a nice whole number, 140. You hit that twice, never got a close over it. And then over the last 3 days, you've had 4 lows within basically a quarter range. So I'm going to just call it 138.50, where you haven't traded there yet in the pre-market. That is a major support level to me. There's something where we take that out, boom, I think we can get some pretty good trade action. So I'll be keeping an eye on that. And then 140 seems to be a roadblock. But just look at the consolidation there. Basically almost 3-4 identical range days there in Apple. 140 on the upside, 138.50. That's a big number on the downside.
I want to add one more thing about this too, and then I'll be quiet. But the one thing I'll say is we may see this impacting valuations in startup land, right? In Silicon Valley, because you get a company like WhatsApp, which Facebook bought for What was it? It
A
was
lot of money.
yeah. I'm gonna find the exact number. It was 19.3 billion dollars is what Facebook paid for WhatsApp. Uh, because they have end-to-end encryption, right? So if we're seeing that everything is vulnerable, I'll be watching valuations for startups that claim to be encrypted when maybe they are not or vulnerable. But so that's
Is
that.
anybody using that WhatsApp anymore, or they're all
Oh,
on Snapchat now?
no, they do different things, but we use WhatsApp we use WhatsApp at
Enlighten me and
work.
Joel, who don't use any
I
of these
got
things.
WhatsApp
What
just
is the
because
difference between WhatsApp and Snap?
WhatsApp is a text messaging app. So
Okay.
But you can put
it
pictures in there.
yes, but it is mostly used, it's primarily used because the messages on WhatsApp are encrypted. This is what they say, encrypted, and so it's a safe messaging app. Basically, you can it's a texting app, is all it is. And Facebook bought
And
it
Snap is
in.
not a texting app?
No, Snap is for pictures, but
Oh, Snap is mainly for
Facebook bought it
pictures.
about 2 years ago for 19 billion dollars, and there's
All right.
over a billion people on the service. So
All right. There's a
And
lot of people on there, so just looking at it from that, I guess that's why Snap is still trading with a $24 billion valuation. But let's talk about the Snap because that's a public company we can actually look at here now, Joel. And it's been a 2-day debacle here for this thing. Obviously, it's getting a little bit of a lift here in the pre-market, but man, we got all the way down yesterday. What was the low? 20.64. So now you're talking about the $20 area. Still worth 24.8 billion, I guess, as of yesterday's close, but. I just, we've been dogging this thing for the last 4 days. We were wrong the first day, and we've been okay the last couple of days here. Joel, you got a technical something on this? It's hard to do technicals on something with four
yeah,
days.
early buyers trapped here in Snap. I think what really caught people yesterday was you had the lower close. You ended on the low, right? 23.77. So a lot of people, oh, I didn't chase it. I'm going to, oh, this is a weak close. It's near yesterday's low. I'm coming in. I'm going long. Boom. You had that lower gap, lower open. So they were trapped. And they took it down to 2064. 2 up days if you consider the first day, going from 17 to 24. 2 up days, 2 down days. Let's see if it can find support there at 2064, maybe put in a double bottom. To me, the only number I can't really get out of my head is 17, right? That's where the street valued it at. So that's maybe where I'll take, an interest looking there from technically, but I don't see anything here between now and $17.
Yeah, I agree with you. Like, if it takes out 20, then you start to think below. Ace making a good point in the chat, though, too. I mean, we have moved from $29.44 2 days ago down to 21 or 2064 yesterday. That's a 9-point sell-off on a $20 stock. It's significant already. And sometimes you do see a bounce at those psychological levels there. And we didn't quite get to the 20 yesterday, but if you're talking 50% retracement, like Ace is talking, you could get back up to the 25 area, and then maybe, I just think if you come in here shorting it now you're late to the party because and it's been difficult to borrow too. So some of the brokerages aren't even letting you obviously get the stock to short, but it feels like you're late to the party if you're coming in here now because the thing was $29 2 days ago. Now it's 21. So long term, I still hate this thing at this valuation, but short term, things bounce.
Yeah, Ace says 1.28 million shares available to short on IB here. So we'll see. The 50% retracing will be a good number. Also, the number I always like to keep an eye on is the close on the first day of trading, which is right up there as well at 24.48. All right, Spencer, we got a guest coming up here at 8:15.
we do have a guest at 8:15, Blaine Reigensmeyer. He is a managing partner of a few sites. One of them is stockbrokers.com. They recently had, I believe it was last week, their annual review of brokerage firms and which is the best for you. And I think it's actually a pretty valuable service if you're a trader. So we're going to be right back with Blaine. All right, welcome back, traders and investors. This has been Zynga's pre-market prep. Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line now with a new guest on the show, Blaine Rankensmeyer from a few sites, one of them being stockbrokers.com. Blaine, how's it going today?
Great, thank you.
Thanks for coming on the show. We wanted to get you on because you just released your annual, 7th annual broker review, where you review brokerage firms on a ton of different data points. And so I wanted to ask you first, I guess, what did your review find?
Yeah, so this year was our 7th annual review. There were 16 brokers that participated. So this year we had 308 total variables. There's actually no other review, print or web, that even eclipses 100. So we go way down that rabbit hole representing traders and the average retail investor. And so we cover 10 categories, and those range from commissions and fees to customer service and mobile trading. And our findings were fairly interesting. Number one this year is TD Ameritrade. Last year, Fidelity had taken it, and TD Ameritrade had taken it the previous year before that. So those two brokers seem to go back-to-back on competing for that number one spot. But two other interesting standouts from this past year were, one was Fidelity took number one for research, unseating Charles Schwab, which had held the top spot for, several years before that. Both brokers are terrific, but Fidelity's done a really nice job with its responsive research area that it's launched over the last couple of years. And then the other really interesting standout was TradeStation, which launched TradeStation Salutes, which actually provides free trading or heavily discounted trading for active and previously active military for the U.S. So that was a really cool. That broker took our Broker Innovation Award this year, and what a great way to give back to the U.S. Armed Services.
So what was it that made TD Ameritrade number one? What was it that made Fidelity so great for research?
So TD Ameritrade just shines across the board. While the broker is more expensive than its competitors, and as I'm sure you guys have been watching the pricing wars taking place, which has just been a crazy.
Blaine, you there? Not sure if we lost Blaine or not. I don't think we did, but he did mention that maybe a train might go by during the interview. So I'm wondering if that is what happened. Blaine?
Hello?
Yep.
Yeah.
Okay. I wasn't
Oh, sorry. I must have had something. Hit my earbud there.
Okay.
But TD Ameritrade was just really consistent across the board. So while they are a little bit more expensive than other brokers, and we've been seeing that pricing war over the last couple of weeks just been crazy hot, which I'm sure we'll be discussing here. But TD Ameritrade is extremely consistent. So they perform well, whether it be platforms and tools, where they're ranked number one again, or mobile trading, which they took number one, customer service, they have number one. So they really shine in multiple key areas, and those extra few dollars you'll pay per trade go back into that investment of those resources and tools for their clients.
Yeah, and I mean, you just brought it up, so I'm going to bring it up now. What do you think about this pricing war? A lot of our listeners, are traders, so we're also watching this from a stock perspective, just looking at the stocks of these companies. But what do you think about this pricing war with Charles Schwab and Fidelity and all lowering their commissions and E-Trade?
Yeah, well, the first things first, the big winner is the retail investor. So, we're all winners here as the brokers cut their commissions. Everyone wins. So, besides the brokers, right? The costs are pretty substantial for the online brokers. I don't have the exact numbers in front of me, but I know for Schwab and Fidelity, it's somewhere around the tune of $100 million a year costing them. TD Ameritrade, substantial cost since they are the largest. They have a huge influx, around 600,000 darts a day, I believe. So it all started on February 3rd with Charles Schwab cutting their rates from, let's just focusing on equities, from $8.95 to $6.95. And then Fidelity came out, last week, and they reduced theirs from $7.95 to $4.95, so cutting $3 off that per trade pricing. Within 10 hours, Schwab came out and then cut their rates down to match Fidelity. Now, at this point in time, you now had Fidelity and Charles Schwab both at $4.95 and TD Ameritrade and E-Trade at $9.99 each. So, your big four brokers here in the U.S. And sure as heck, by the end of the day, by 9:30 p.m. that night, TD Ameritrade had announced they were cutting their rates from $9.99 down to $6.95, and justifying that value again with their proposition on products and platforms and tools, etc. And then it was might have been 24 hours later, but a day or two later, E-Trade ended up cutting theirs. And the interesting tidbit was E-Trade, when they cut their rate from $9.99 to $6.95, they also announced a new active trader rate. So if you trade 20 trades or more per quarter, then you get a discounted rate down to $4.95. So there's a lot of data in there. I know we just went through pretty quick, but it was really fascinating to see how the brokers handled it. Because you got to remember, E-Trade just acquired Options House last year, which was number one for options trading this year in our review. Again, phenomenal broker for options trading, and they already had discounted options and equity trades in place. So I was curious to see how E-Trade would handle it, and I thought that they did a really nice job with their pricing structure.
Now, I also want to ask you, you also rate robo-advisors, right? There's a few of those in your ratings as well. So what did you find in your robo-advisor land?
Yeah, so this was the first year we covered the robo-advisors. We had 8 robo-advisors included. We were the only review so far that's actually opened and funded accounts with each and every robo-advisor. We really wanted to understand what the true client experience is and use those tools so we could assess them in great length and then naturally commentate on them. And so the findings were fascinating there. You have your initial, the first participants in that space, Betterment and Wealthfront, and as expected, they did pretty well. I mean, Betterment took number one and stole a variety of categories, just because it's an all-around experience, similar to TD Ameritrade, but Betterment has a very clear understanding of how to provide an all-around fantastic experience for its customers. But you see a lot of the brokers over the last year, a variety of them, from Fidelity, which launched Fidelity Go, to TD Ameritrade, to Merrill Edge. Trade King Advisors has been a couple of years, but the other 6 participants were online brokers. So the online brokers have gotten to the space as well. And there was a standout there like Schwab, Intelligent Portfolios, did really well. They have a great, excellent mobile experience, which we found really stood out with the robo-advisors. It's about not only the cost, because a lot of them are all really inexpensive because you're passive indexing, but it comes down to the tools and the goal planning. Can I plug in my personal financial information and get a really clear understanding of what I need to do to hit retirement and be successful for the remainder of my life. Robos can also be utilized for saving for college or saving for a trip or more other life events, so to speak, that you might have planning, even down to a house. But predominantly, they're best utilized for saving for retirement.
And I want to stress, all this information is available on your site, stockbrokers.com. You can see all the ratings broken down by category: commissions and fees, customer service, research, platforms and tools, mobile trading, and there's also other in a final thought section. So I think what you do is super valuable because one of the most common search terms is which brokerages should I use, which brokerage is right for me, and obviously it depends on what kind of trader you are. But Joel, you have a question, so.
Just taking out price here for I think the most underserved customers are the millennials. Their parents were jaded. What's going on in the financial markets? Taking out price overall. Which platform do you look as the best to someone that's just a young kid, a young millennial, just getting starting up, has a little bit of disposable income to start investing out. What platform stands out to you as the one that, and commissions are obviously one thing, but they're not going to be a lot of trading. Which one do you like the best?
Yeah, no, that's a really good question. Actually, I would say TD Ameritrade. And when I got started when I was 14, I had a custodial account opened for me by my father at TD Ameritrade. And even back then, TD Ameritrade was still a couple of bucks more per trade. And what I found, and still a client today, and now a client with majority of the brokers, but TD Ameritrade really stood out to me back then when I was young, and it still remains that way today. So pricing aside, that all-around experience from education as a new investor, which is certainly important, to utilizing those tools. So TD Ameritrade has 2 platforms that really stand out, from a web-based, if you want something more simplistic, to the desktop-based, which would be Thinkorswim, which is more in-depth, but you have those capabilities to use the website, use a web-based platform. Are you more comfortable with active trading? Well, then check out Thinkorswim. You have that flexibility that I think creates that well-rounded experience. So TD Ameritrade for sure.
All right, we've been on the line with Blaine Rankensmeyer, managing partner of StockBrokers.com. You can check out all the insight on the brokerages there. Blaine, thanks a lot for hopping on today. We'll talk to you again soon.
Thank you.
That was a good. We don't often talk about the different brokerages on our show, and who uses what in our chat. I think that was a good discussion.
He's a local guy. I just
Yes.
I looked him up, a local guy. Maybe we'll get him in for a live interview one of these times. All right, Dennis. Any comments? I mean, you've used a lot of different platforms, retail.
Well, I don't want to. I just want to jump into that ATP data. Did you see the financials just blasted off on that? So right at 8:15.
Oh, look at that!
Yes.
Oh boy,
Yeah.
290.
The financials blasted off. So give us the numbers there, Spencer. The ADP data.
298,000 versus 190,000 estimate for February.
Huge jump.
Prior was 246, so
I
298.
think ratings on the wall here. Rates are going up. So if you were still thinking that rates weren't going to go up here, I think with this data point here now, I think the rating's on the wall, and the financials just blasted off on that. Bank of America's now up 1.5%. Citigroup's trading up over 1%. Goldman Sachs popped $2 on that. Morgan Stanley's trading up almost 1.5%. J.P. Morgan's up 1%. So financials blast off and going the opposite way. Obviously, all your defensive yield plays. XLU trading down 6% here in the free market. TLT up further. It's down over $1. If you just jump into, like AT&T and Verizon and some of the yield plays, those are all trading in the red now too. So utilities are very weak on this, and obviously anything that's more dividend, sensitive here is very weak here, because it does look like with that data point that rates are probably going up.
And how about a half? How about they just go a half?
Joel's got the half still floating out there. I do not think they're going to do that. So, I'm not in the half camp, but I think the quarter is almost a guarantee now. Unless, the market blows up between now and next week, I think we're going up a quarter at least.
Yeah, I mean, that was the Fed fund futures. That was pretty much factored in, and I think it was at a 90% probability. S&Ps took a quick dip off that, but they seem to recover. Down $1 here at 65.50. So this is interesting here. Historically, interest rates going up are not good for the market, but let's see. I mean, if they've just fine-tuned this economy enough, and now we'll just slow it down, put the brakes on a little bit, and everything's okay. But we'll see. We got another week to find out what the Fed's actually going to do.
Yeah, big pop though. So financials here obviously looking strong, and like I said, the other stocks, the utilities and defensive ones are looking weak here. We didn't get to any earnings plays here, so we got to jump over to the earnings parade, because there was a few stocks that reported here. I want to jump to the big one from this morning, and the big mover here, and it's given back some of the gains here now. But Children's Place, PLCE, this thing broke out and actually got close to a new all-time high here this morning. I don't know if it touched it or not. We had traded up to 111 just a couple of months ago there, and now you look at it and it's trading up here in the pre-market at 107.05. Spencer, give us the numbers, and Joel talk about the pre-market action.
Children's Place Q4 EPS of $1.88 versus $1.59. Sales of 520.8 versus 522.2 million. So they missed the sales number by a bit. They also see their fiscal year 17 EPS at $6.50 to $6.65. And what else? They also announced a $250 million buyback. That's the big one.
Just missed the all-time high there, Dennis, as you mentioned, in Children's Place, all-time high, I believe, up in the 111 handle. We had an all-time, no, we took out the all-time high.
What was the high, pre-market high?
Pre-market high was 110.75. Wow, how close was that? By 50 cents, 111.20. So I think the high for the day is in this one after you've fallen off $4 here. So keeping an eye, just call 111. Major resistance on the downside here. It looks like 106 is held up since making a high, but that's minor support.
So we're leaking here a little bit on Children's Place. Also reporting there, just jumping to last night's report, you had Urban Outfitters, which is actually getting the beats. URBN got a little pop. It's like the fade trade still on here on some of these. Gets a little pop, and then it gets a drop. And retailers are just a mess here. Spencer, how did Urban Outfitters do?
They reported Q4 EPS of 55 cents versus 56 cents, sales of 1.03 bill versus 1.04, and their comps to the retail segment are unchanged. They're getting a downgrade this morning from William Blair to Market Perform. Were they the ones? Refresh my memory. They were the ones that bought the pizza restaurant.
I
Right?
was just going to ask
Okay,
Spencer,
yeah.
how were the pizza numbers?
I
How were they?
I don't know. I don't know.
Because if you eat too much pizza, you're not going to be able to fit into those Urban Outfitter clothes here. I'm trying to see when they jumped the shark on that, because when they announced, I think it was a Philadelphia pizza business that they were buying. We'll see if I can find it real quickly. They got into the pizza business in November of 2015. So let's go to the monthly charts, and in November 2015, where was Urban Outfitters trading? That was a long time ago. November 2000. That's actually, maybe the pizza business was good. It's rallied since then, but they down in the market today, down at 23.75. Taking out the former low of the move. The former low of the move was at 25.01.
H&R Block getting a lift here in the pre-market. I guess tax season is coming up here. Maybe it's a pet of that, but the numbers did come out last night, and how did they do?
Q3 EPS 50-cent loss. So that's in line with the estimated sales of 451.88 million versus 446.4. So they beat the sales number.
Good enough. Stock has been in the doghouse here, and they were looking for a reason to buy, and they found it. And stock's trading up 7% here in the pre-market.
Yeah, pre-market high 22.70. Nothing real relevant up there except for your 22.97 high, flanked by 23.33 double top. So if you get back up there, I expect to see some resistance at 23 even.
Sienna reported here this morning. CIEN stock is getting hit, down 3% at the pre-market. Spencer, the results for Sienna.
26 cents versus 29 cents. Sales of 621.5 for 632 million. So they missed both those numbers as far as Q2 goes. They see their sales at 680 to 710 million dollars. That is in line with the estimate.
Joel doesn't have any comments on the technicals on this one.
Man, I don't know.
This is a tough one, Joel.
I don't know. I'll let you do this one. This is
You give me the tough one. You're
Yeah.
the technical guy here. Okay, I would just say, we're below the three bottoms from the last couple of days here. So you had three lows in the same area, 25.64, 25.61, 25.64. Till you get back above that area, that's it's just not a great looking chart here. So still digesting the move too. Only 89,000 shares have happened. So let's see what happens. If it can reclaim the three lows from yesterday, maybe it's got a chance.
A lot of air between 24 and 25 here. Pre-market low is right at 24.81, so we'll keep an eye on that. Below that, look for the lower 24s.
Another retailer disappoints. Surprise, surprise. EXPR trading down 10% in the pre-market, taking out its critical $10 support level with some size too. Already 120,000 shares have traded. The results?
For Express, Q4 EPS 29 cents. That is in line with the estimate. Sales of 678.8 versus 675.9 million. So they beat the sales number by a little bit, by $3 million there. They see Q1 EPS at a 4-cent loss. That is 4 cents higher than the estimate. 4 cents loss to even. 15-cent loss was the estimate, so they beat that number. And then they see their fiscal year EPS a little lower than the estimate.
A little lower than the estimate. They find a reason to sell these retailers here, and there you go. EXPR is selling off 11% in the pre-market. I mean, sentiment matters more than anything sometimes, and this stock has been the doghouse for a long time. I mean, this was a $20 stock a year ago. Now we're looking at this stock here, not even a year ago, actually. Just going back to the weeklies here. Well, yeah, I guess it was about a year ago. Back in April of last year, it was over $20. Been cut in half, down 10. I mean, it's hard to buy any of these, mall retailer stores that are selling clothes. I mean, all of them are the same story. They're all having a whole lot of trouble. I don't know if it's Amazon. I don't know what it is. But, it's just the same story across the board. Even the big department stores have had all kinds of trouble. Apparel retailers just are not in favor.
And making a new all-time low is URBN here. That former all-time low was $9.91. We trade $9.01 in the pre-market. So need to get back over that $10. $10.43 was yesterday's low. But as Dennis would say, making new all-time low, time to go.
Jumping over. Have we got the Bob Evans numbers yet? I saw it on the calendar. Has
Uh,
not even made a trade here this morning. Actually, that's not true. Traded 5 shares at
Yeah.
54.70. Did you see Bob Evans come
Yep.
across the tape? Because this is the widest spread ever. The spread right now is $54.81 to $199,999.99. So obviously that's just a stub quote up there. So there's no offers in the book.
They came out at 7 o'clock about this morning. Q3 EPS 75 cents is in line with the estimate. Sales of 336 about million versus 344 and a half, so they missed the sales number. They also raised their guidance. However, they raised the fiscal year 17 guidance for $2.15 to 230. That's the range on the fiscal year EPS. That was the original range. Now it is 222 to 232. So they raised that up by a little bit.
All right, so you got a bid of 54.81. You have no offers in the book here. Joel, what does that mean for you? It's tough to do technicals when you have no shares basically traded and no offers in the book.
Oh, Dennis, why don't you put an offer in at 56.50? That is just
Yeah.
no.
I ain't gonna do that. I'll tell you now. You want to throw it out, and Spencer just got done saying they beat on guidance.
Okay, all right.
What? Okay, let's go back to Spencer. So what? What did they beat on? They beat on guidance. What else?
They raised their fiscal year 17 EPS.
I'm not offering that thing down. raising estimates.
Okay,
No,
then all right, then bid 56.30.
I'm not even participating. I'm not even the first guy throwing my hands, showing my cards there, and trying to participate and make price discovery
Bob
happen on
Evans.
this one.
I don't
Not
know.
on this one. Not with the spread that wide. I'm out.
Okay,
I'll wait
what?
till a few more people that obviously have a little more information than me decide, and have actually read the report, decide to put their bids and offers out there.
Okay, the last 6 lows have been between 56.12 and 56.44. So 56 and a quarter is either going to be the bottom or the top today. So
There you go.
There you go. There you go. Bob Evans down the farm, and there's a big gap in this thing, and I don't know what instigated that. I don't. Maybe they said they were spinning something off or had some real estate holdings. But if you take out the low of that gap, 54.61. See you later.
All right, let's jump over here to the cat.
I have one more thing before we get to cat. I want to go back to Vault 7 for a second, and I said there will be implications that we'll be feeling for a while now as people sort of parse through this. Case in point right now is a guy from Juniper. This is Craig Dodds. He is the chief architect of security at Juniper. Wrote a little analysis this morning, or actually yesterday, on LinkedIn that was just tweeted by the WikiLeaks Twitter account. So he was checking the report to see if anything that if Juniper was exposed at all. He didn't find anything, but he did say that he did. It seems to him that Cisco was a big target for attacks, and so I looked at actually the chart of Cisco this morning, and they got a nice little pop. I don't know what that's about, but this guy, Craig Dodds, who is an industry expert, is saying that according to his initial analysis, it did look like Cisco was a big target for intelligence attacks.
It's trading down 3 cents, so it's down a little bit here, but it's been kind of just all over the place.
But
So
that's a
not
guy
much
from
movement in the
Juniper
pre-market.
talking about Cisco.
Yes.
So I mean,
Yeah, those are like rivals.
yeah.
Yes, but I think when it comes to the issue of government surveillance, everyone's sort of on the same side when it comes to cybersecurity. I don't know. That's
Okay.
That's kind of how I feel. Everyone in the biz is sort of they're on the same team. I don't know, but worth noting. This is just keeping on your radar. This will be happening as we learn more and more.
This analysis is way above my pay grade,
Yeah,
so I'm
it
not
is.
even going to try to dive into implications for all this wiki stuff. But we can do a technical on anything here, and if you're trading Cisco there, the $34 level is critical. I mean, the two lows from the last 2 days, 33.99, 33.96. So if it started to take out those, I'd get concerned. Otherwise, I think the bulls are still in charge in Cisco.
Yeah, and you also had a low just above that level going back 6-7 sessions. So on the upside, 34.53 looks like to be a double top high of the move.
Multiple people want comments on NVIDIA levels here, and that stock is trading up in the pre-market. We are up quite a bit, actually. We're up over $1 here. AMD is trading higher as well, so the AMD pair traders are trading NVIDIA right along with AMD. $100 even, I mean, that's the huge psychological level. It did, I would say it kind of held it. It got down to 9. I know 2 days ago it got down to 95.17, and the low before that was 95.70 of the recent move, but, decimals, $95 is still, as long as it's holding 95, you might get a pop. And this is one of those examples where stock just got really hot, and obviously overheated, and then it cooled off, and then it had the run up ahead of the earnings, had the earnings report, and then cooled off again, and it kind of put in a double top. So now 120 is just your area of major resistance up there. But we've had a significant sell-off, and there. We're 20 points down from there now. Can this thing bounce? Sure it can. I'd say as long as it stays about 95, there's a potential for the bounce play. If it started to take out 95, that's where I'd get concerned as well. I don't like it when they start making new lows on the move.
Yeah, I was hoping from that original shellacking from the double analyst downgrade that you'd get a little bit more than a bounce that it did. I was hoping for a 50% bounce. Missed it by a couple points, but that's still relevant here. 25-point move, 12.5. Takes you to 107.5. But, man, just something makes me think it's going to have a hard time getting there. There's people trapped here that bought it on the rebound. I think what you need to do for this to get clear sailing, you need to get back into that 100 handle, maybe even clear the 4-day high at 102.84. Now that you've come down, now people, this is the second bounce coming. More people are going to think about trying to unload here on it. So I don't know. I don't know if the story's actually over here in the video, but it already had the catalyst with the good earnings report. I don't think anybody's going to be coming out with a raising, upgrade or something like that. So I think that 120.92, that could be the all-time high for the next 15 years in the video.
Caterpillar. All right, so we had the news that hit it about 4 days ago. More bad news here again. That probe is looking like tax fraud.
That's kind of what we said when it happened last week. The CEO did issue a statement yesterday regarding that, saying just that they were surprised by the raid because they are cooperating and they are honorable, and what else is he going to say? But Doug Cass did actually tweet about Caterpillar this morning, but nothing new here. It's the same story.
So the market's hitting it on this. So that maybe it's official. That they might get charged with some tax fraud here. We're down 2 points.
Well, Doug Cass did say it's his favorite large cap short for the year.
Yeah, but you think Doug Cass put this thing down too? But I like Doug Cass. I mean, he's somewhat influential. This Caterpillar knocking it down 2%. I don't know. That's pretty. 167,000 shares. I'm not sure. Cass has that much influence. If he does, he's one of the most influential people in the world. So this is Caterpillar. I think Cass, can knock a stock down a little bit, and Dougie, if you're listening, we love you. But I don't know if you're the one knocking Caterpillar down 2.2% today.
You got a big
low. Maybe he is.
I don't know. I'd be skeptical of that too. Pre-market low comes in at 92.30, and that's a critical area here. The CAT has been volatile as of late. Early in the year, you hit 92.41. Then I think it was after earnings, you hit 92.11. You came down into 92 handle yesterday to 92.84. So, I mean, until that support is violated, you got to respect it, covering is short. Coming back on the upside here, you got the close in 95.93. I don't think we're going to see that on the upside. I mean, really, until this whole thing is resolved, one way or another, it's just kind of hard to be in this from the long side. We had Gordon Johnson has this as a short. I don't know if this was part of his thesis as all. I think it was more of an overall slowdown in China. But let's keep an eye on 92 even, 92.25.
I mean, let's put it in perspective too here. 2016 was a fantastic year for Caterpillar. Like the beginning of the year, people were talking about this company, being, having a lot of debt, being in trouble, the slowdown, maybe China, hitting this, nobody buying new equipment, and this thing got down to $56. And that was dead wrong analysis because it has been straight up and was one of the best performers in 2016, closing the year obviously up around 93. So you're talking about, an over 30% move on a $56 stock. So you're talking about a 60% move higher in 2016. So, and you've had a little bit of continuation here in 2017. We're up just slightly here. But, there's a lot of air below. If we were to take out that 90, it starts to get ugly for sure. You had the gap and go back in November. So I just, I'm a little bit cautious on this one just because there's a lot of people selling a lot of profits. Now you have some unknowns with obviously, potential tax fraud involved here. That's why I think I'm hands off on the long side on this. If you're buying a dip and you think, it's down 2 points, I just think the dip could get bigger.
Look at the monthly chart here. That really tells the story here of going from 56 to 36. And early January, tried to break into triple digits, Dennis. I don't know. It was a while ago, and there was a bunch of monthly highs that I'm illustrating, or those are weekly highs, but there must have been a big number at the point there. Someone wanting to get out at triple digits and then just hitting
Oh
any
yeah.
bid over 99. Because look at that. You've had, 4 of the last 5 months, highs right near the century mark. So, whole number theory. This one you would have had to step out a little bit because the highest that they've gotten over the last 3 weeks was 99.46.
All right, jumping over here just to a couple stock. Actually, let's go to this PRKR news because this thing's really flying here. One of your big movers of the day, Parker Vision here. I actually, I gotta learn how to hold better. You gotta get that scalper blood out of me somehow here, Joel, because I nibbled on this one when the news broke. My Twitter was lighting up there about this case here that they had actually won, and some people were saying this could go a lot higher. I know there's some analysts out there. I believe who I follow there on Twitter, Mark Lehman from Mark Flow Chatter. He was noting that somebody had a note, Leidenberg's Hickman, in his last note reiterated that his target is $18.50 if PRKR won. And that this could monetize their IP in a big way. I'm not sure, I obviously don't know if that's coming from Mark Lehman on Mark Flow Chatter on Twitter, who's a great follow. But he's got an $18.50 price target on this thing. It's $3.50. So that's a bold call, obviously here. But big pop yesterday, continued pop here this morning. It's up another 37%. I bought it and sold it for like 20 cents. I obviously should have held. So, Spencer, what are the details here?
Well, so there's a bunch of different patents between. This is a motion filed by Qualcomm against Parker Vision. Parker Vision received 3 favorable decisions and 1 split decision. So the 3 favorables are obviously what's driving it up. Like you said, it's a way for them to monetize their IP, and they beat Qualcomm, which is no small feat.
Huge. So the stock's getting another lift here. I don't know anything other than what I just read you from Mark Flow Chatter on Twitter, who again is a great follower. We were really pumping him this morning. PRKR, just give us some technicals, Joel.
Dennis, do you mind walking us through like how you maximized your Twitter feed there and kind of
Yeah, you know what, and that's the one thing, as you find different people who are influential or who seem to have a lot of good information and good analysis. I add those people to my Twitter feed, and obviously, I follow. I think there's 600 or 700 people that I do follow, and I've always noticed, and I keep him on my screen, and you can use TweetDeck, you can use a lot of different ways to do that, but that individual that actually Mark Flo is, I've always found that he's very quick to get new information, or he's looking at analyst notes, he's analyzing it there, doing analysis here that I'd have to sit and do myself. So if I was to actually give that, so he's doing a lot of the work for you there, and he's really giving the highlights of this analysis. So he does a great job over there. So he's one that I follow. Obviously, you want to follow a lot of your influential people there. I mean, there's just a ton, and I can look at my follow list if you want, and maybe come back at you tomorrow with some of my favorite ones.
All right, we got a big old pop up to 455, and have kind of fallen back, building some support here at 340. This was once a 77.80 was the all-time high back in October of 2013. Nice pop here. I mean, you just want to see, you get these kind of moves and you see 455. That was your high back in October of last year. You matched it there. So for continued upside, you need to plow through that 455. Kind of looks like sellers have come down off that level here since we've reached it, but always looking for follow through the pre-market high. And just to illustrate that too, yesterday, Weatherford International gets a new CEO. Gabelli says, maybe this is going to mean Halliburton's going to buy them in a couple years. Big old thick stock, right? They got that thing moving into pre-market, just got over a whole number. But really, what materially has changed in the company? The ratings, the earnings. I mean, this guy stepping in, you're going to buy it because Halliburton might buy it in a couple years. You get a big percentage move like that, and a pretty heavily traded stock. And if you could, it took a little heat off the open because it went from 692 to 709, but boom, ended up coming back down to 653, settled a little bit off that level. So I think you'll see some more selling pressure in Weatherford International today.
Jumping over here, we were just talking Twitter feeds. Let's talk Twitter stock here because
Oh.
TWTR has been beat up. I mean, this has been an ugly run here. It's down for 4 days in a row here and now. You're starting to get to a level. Remember, I've always said I like the 14 level. We're only a buck away from there now, but you start looking at it on the chart here and put it out on the weeklies or even the monthlies. You got an ugly head and shoulders. Obviously, at the 20 left, and then you had the head up to 25 when everybody was going to be buying them, either Salesforce or Disney. Those never materialized. You kind of put a right shoulder in 20. It's been leaking ever since. But the 14 level, that was the low that we got to 1372 back in April and May before the stock had all the rumors of the potential buyout. And it kind of feels like that's where we're head back to. And I mean, I don't know if I'm going to get down and dirty and buy it there. I bought it there. I actually bought it there twice, I think, in that 14 handle. I made money both times. So despite always hating Twitter, I made money on the long side on it a couple of times, probably just luck and good timing. But if it gets back down there again, I might try it the first time down in that 14 area.
And I discussed on the pre-market show. I had dinner last night with my swim coach that started coaching me when I was 6, 7 years old. The biggest bull that you've ever met on the market. So I was just going through stocks, for his, recommendations. Apple buy, Intel buy, every stock buy. And then
This guy's a big bull.
He's a big. Oh, he's like buy the dip. I mean, he's been buying the dip since like the early '60s. And so I said, Twitter. He goes, sell. And
He doesn't like
there's
Twitter.
this oldie.
It's the only one he doesn't like.
Yeah. He.
Why?
It's just he. Well, the reason it's stuck long it is one reason, and he
Oh.
bought it. He kind of bought a little bit of the hype. He thought with Trump using it a little bit, so he picked a little piece and he sold his son to sell it when it got to 20, and it got a little pop, and it was like 17, 18. He's like, DP, get me out. And he never did, and so he's still stuck with it. And I can't say what he has he calls it different than Twitter, but I can't repeat what he calls it. But this stock is off my screen, Dennis. It's off my screen. I'm done with it.
You're not looking at Twitter anymore? You're
No.
done playing Twitter from the long side?
I'm done. I'm done completely.
What about the 14 level I'm talking about? I played it twice at 14 already. I'm going to play it there again if it gets down to 14. I know it's 15. Ace is talking about 15 psychological level. Could have a little bounce there. I'm not playing off 15, though, because I've played it a couple times off 14. And that's one thing about your own trading. When you get a level and you've made money off it a couple of times, it comes back down the third time, a lot of times it goes through it, but if it comes out the fourth time, the fifth time, sometimes you just keep playing that level until it doesn't work anymore. And I remember that trade, I talk about in G that I had back in the day. I played it like 17 or 18 times off of a big whole number where there was some size that I was leaning on. And, I was like, once I do it like 3, 4, or 5 times successfully, I got to do it every time until it doesn't work anymore. It takes out the level, I'm out. So if I was playing Twitter, and let's say hypothetically speaking, not saying it's going there, but it's all about setups and being prepared when you do have the setup. Let's say hypothetically Twitter does get back down to the 14 level. I decide to buy, let's say 1405. My out would be the 1372 low. Things starts cutting out. You got to give it a little bit because sometimes it go 1365 and all it stops and that's the low. But say it goes, I'll risk 50 cents. So if I was buying a 1405, I might risk down to like 1350. Goes 1350, I'm out. But and you play it maybe 2 to 1 if it bounces to 15 or 15 and a half. But it has bounced back there before. That's the level that I like, is the 14 level, at least for a bounce level. Valuation, it's still a little bit too lofty for me, even at 15. I've said that all the way down here, and I still am scared of valuation because when I compare it to a media stock, traditional media stocks, it still looks expensive. Even though when you compare it to like a Facebook or even a Snap, it somewhat looks cheap. I was going to say tweet. It somewhat looks cheap. But valuation still scares me on this long term. But 14 level could be a bounce if it gets there.
Where's the driver? Where's the catalyst? I mean, what? If the president of the United States is using it and
it's got all kinds of issues.
Yeah,
There's
mean,
all kinds of
just
issues
can't.
here.
Yeah, just can't figure it out.
Everybody
here.
uses it. Like a lot of people in the financial industry use it. I mean, like we said before, and we've said this a million times, so we're kind of beating a dead horse here. But if you like, if you're into the stock market, great. Free information sources, all kinds of them, and they are starting to monetize it a little bit, where they're starting to realize that, hey, there is information in our tweets that we can sell. So you do see Twitter start popping up on some of the major news services here now too, and I'm sure Twitter's getting paid for that. But they need to figure out how to monetize their existing user base. Stop focusing on growing it, because the people who are already in it, that's who love it, like me and you, and who like stock market, and sports too. It's got great it's fun to watch your favorite team and watch on Twitter as well, especially when they're losing because misery likes company. I mean, you can see a lot of funny stuff on there when you're even following your favorite sports team. So it's good for sports, good for stocks. I don't know a lot of other use for it. So
Well,
that's my own opinion.
the biggest thing will be, I think, sports rights, TV rights, or broadcasting rights, I would say. Going forward, we know they've broadcasted football last year. They'll be broadcasting some baseball this year. It remains to be seen. I think the next phase of the sports rights training will probably go through places like Yahoo and Twitter and non-traditional TV formats, and we'll see how Twitter, competes against, the Facebooks and, for all I know, the Apple TVs or the Netflixes or the Amazons of the world, because I think that's like the next big game in town. So we'll see.
So we got about 3 minutes left here. If there's any stocks in the chat, let us know which ones you want to talk about. I haven't given an imbalance look yet, so I will do that now. Pfizer, 100,000 a sell. We know a lot of the drugs got hit pretty hard there yesterday on Trump. Obviously, he trumped them. Some of them did bounce back by the end of the day, though. So, which we've seen, historically, when Trump, tweets something in negative on a stock or negative on an industry, it gets hit, and then it typically, when the dust settles a few days later, it often does get those losses back. So we did see a little bit of a bounce, but this morning, obviously, some institution is saying no to Pfizer, 100,000 to sell. Also, AT&T, 44,000 to sell. Verizon, 28,000 to sell. Not surprising that you see a little bit of pressure on those stocks there again, with that jobs number there being pretty hot. Probably interest rates are going up. Those stocks not as in favor if interest rates are in a rising environment. Financials very strong here this morning. Not a lot of buy imbalances there yet, but I'd expect that's going to turn because you're really seeing strength in the financials. Bank of America's up over 1.5%. Morgan Stanley's up. Goldman, Wells Fargo, City, all trading 1% to 2% higher here in the pre-market. Very strong. Just looking other ones from imbalance land. Nike's got 44,000 to buy. Ford, Kramer was pumping it on Mad Money last night. 88,000 to buy. Twitter, 90,000 to sell. I mean, here Twitter again. So some institutions is dumping Twitter here this morning, it looks like.
All right, let's just take a look. Just the financials, getting a nice pop off the strong jobs data. Bank of America finding a little bit of resistance here, just at the highs of the pre-market session, 25.61. If you're trading these individual financials and you're looking for a potential area, pick the high of the move. Like for me, I'd be targeting 25.80 in Bank of America. And there's probably a couple trillion to sell at 26 as well. Goldman Sachs, high of the move, 255.15. So if you're looking for some targets on the upside or continued follow through, JP Morgan, 93.98. So keep an eye on the highs of the moves if you're trading these financials.
Minute left here, Spencer.
Yeah, I was about to actually hop in and just say that's pretty much about it for the day. I want to just note that Vera Bradley, VRA, is down big this morning. They issued some bad guidance. They came out as part of their earnings report. They really missed on the guidance. So VRA down big this morning. But that was the only other mover that I had on my radar. Skyworks Solutions got a double upgrade this morning. They may have said something yesterday at the Morgan Stanley Tech Conference. That's it from me though. Looking ahead to tomorrow's show, we have Chris White, and he's a new friend because I believe Joel and Dennis, you guys met him at the expo last week. So looking
good
forward.
Product, good trade generator, trade ideas.
All right, good. I'm looking forward to chatting with Chris tomorrow. If you missed any part of today's show, you can catch the whole thing. On YouTube right now. You can just rewind it, or if you want to listen to the podcast, you can do that on iTunes, SoundCloud, and Stitcher. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Hope everyone has had a good morning so far. Hope you have a good rest of your day, and I hope you join us again on Thursday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.